thought we'd focus on Coles today as our stock of the day. As Ben was saying, they've updated the market, reporting 1.6% rise in first quarter sales as continued lockdowns kept consumers flocking to the shops to stock up on essentials. On the outlook, the supermarket giant expecting COVID-19 costs to peak in October and moderate further into November and December as consumer behaviour begins to get back to normal. Bigger rival Woolworths, of course, just a couple of days ago pointed to sales starting to slow in October as restrictions ease. Coles says comparable sales in the early stages of the second quarter were broadly in line with the previous quarter. Both Coles and Woolies have benefited from on and off lockdowns, of course, over the past year as big cities like Melbourne and Sydney were forced into some of the longest COVID curbs in the world. So Ben, as you assess all up, apart from supply chain, what did you think of the Coles update and compared with Woolies?
To be honest, Coles was probably seems on the face value, it seems to be a bit stronger than Woolworths was yesterday, just in terms of probably more like just what they're calling out that they're seeing at the moment, not so much in the last quarter. So Woolworths was probably a bit more cautious and saying as consumers are getting back out to cafes and restaurants, they're not spending quite as much in the supermarkets as they were, whereas Coles seemed to be calling out, a quarter that broadly in line with the last quarter. So to me, it's incremental, but it's a slight sort of beat probably to what the market was expecting. They've both done really well, I think, managing so many problems, and it's been a boom time, to be honest, for them. And I think the other highlight in the Coles quarterly today was just that the online sales businesses for both companies have just taken off, and that's a scale game. And it's also, if you get people trying it, they will stick to it, and that. As the volumes going through their networks ramp up, they capture more margin with increasing volume. Ultimately, they would love to keep growing those parts of the business. I think Coles said, 47% growth or something in online sales. So, that's something. And Harris Farm, I don't know if you read, they were looking at maybe selling and
now keeping it within the family.
Yeah, and saying, calling out the online part of the business. I think it's gone up 6-fold in 2 years or something. So, that's an area that these businesses can tack on additional profit.
Right. So is the purple patch for the supermarkets over?
I think so. Yeah, I think.
Would you be getting into any of them?
We own Woolworths, and I'd continue to own Woolworths. I think it's a great business, and Endeavour that was spun out of it, I think it's an interesting business as well. But I think you're probably going to see the cost side of the business kind of normalise a bit, and probably the sales side of the business normalise a bit as well. So maybe it's kind of like the earnings sort of standing still for a year or two, rather than, everyone knows that the sales volumes are going to come off, but it's the cost part of the business could insulate somewhat of that.
So there's not going to be any growth in either of them for the next 12 months?
I think if there is growth, it's going to be like less than 3 or 4%. Yeah, it's not going to be significant.
So happy to hold if you're already in them, but
great businesses.
Not worth getting in
no,
with new money.
I wouldn't be chasing them. I think better things to look for at the moment.
Okay.